Today on the show, I have the pleasure of speaking with David Wolcott. Now, Dave has started his career by serving the country as a captain of a Marine Corps. And in 2000, he and his wife brought triplets into the world, which really inspired him to challenge the traditional ways of thinking around financial planning. Today, Dave is an author, podcast host, and founder and CEO of Pantheon Investments. And he's really passionate about helping other entrepreneurs build wealth passively by investing in superior real estate and alternative assets, by providing predictable cash flow, tax efficiencies, and upside potential as a reliable alternative to the volatility of the stock market. I'm really pumped and excited to have him on the show today to share his incredible knowledge and insight with us. G'day, Dave. Welcome to the show. How are you doing today, mate?
Hey, Reed. Good to be here. Grateful to connect with you and the listeners.
Yeah, well, it's been a minute. We were just talking a little bit in the green room. It sounds like you've got some awesome stuff going on, which I really want to dive deep into in and around your platform that you're building. But before we get into that, can you rewind the clock and tell me how you made your first ever dollar as a kid?
Yeah, the first one was really doing landscaping gigs around my neighborhood. I remember just taking my lawnmower down the street and you get $20 a lawn, and before you know it, you start getting some recurring revenue with repeat customers. And that was really my first entree into entrepreneurship.
Walk us through the life that you led up until 2000 and that sort of challenging around your financial planning. I mentioned that you're in the Marine Corps. So did you grow up in and around money, and what was your relationship like with money growing up?
Yeah, so Reed, probably like a lot of listeners out there, right? I was raised in a middle-class family, grew up in Connecticut, and I was told that the recipe for success was to go to school, get good grades, you're going to get a job, and everything's going to kind of work out, right? So I followed down that path and got into the Marine Corps. Got a chance to serve with some amazing people, travel the world, phenomenal experience, and then really, learn some things in the Marine Corps they don't really teach you anywhere else. Things such as leadership, teamwork, and integrity. Right. So after I completed, the Marine Corps in college, through that, I transitioned in the corporate world, got into the tech industry. And we started to raise a family at the same time. So we had an 18-month-old, and I know you have a newborn as well too, so you can appreciate. So we had an 18-month-old, and then on October 24th, 2000, my wife and I hit the baby lottery and literally had triplets. So our life became quite chaotic. We quadrupled the size of our family. And the first thing I did, Reed, was I was really concerned about, financial security for my family. I mean, even back then they were talking about, it's $1 million per kid to raise your kid. I mean, how am I going to really build wealth? And, sat down with my financial planner, and all he could tell me was, just max out your 401ks, put your money in 529 plans for the kids, and, build up this, big nest egg. And I think the entrepreneur in me at that point just got so frustrated with that average advice. And I knew I could do better. So I really wanted to solve the problem of how are the top 1% really building their wealth? Because I knew it wasn't as a retail investor in the stock market. So from that point on, I started investing in alternative assets, everything from oil and gas, raw land, retail, multifamily, office, all kinds of different asset classes. And then I also transitioned to the B side of the cash flow quadrant, became a business owner, started my own tech consulting business, ran that for 13 years, exited that, and learned a lot about taxes there and running businesses. And so fast forward to today, 20 years later, and my book is really kind of an instantiation of all of my learning lessons, right, on how to, really create a system and a strategy around building wealth, right? It's not just one thing. It's about this overall process of really how you build wealth.
Yeah, no, I love that. And thank you for sharing that background with us. And I want to get into the book in a minute. But what was the did you just stumble across alternative assets? Because it's not just like every day people talk about it, right? Particularly 20 years ago when you sort of had that the epiphany, no one was talking about commercial real estate. No one was talking about oil and gas. No one was talking about these things outside the stock market. So where did you go to get educated on that back in the day?
No, 100%, Reed. I mean, there weren't great podcasts like this or YouTube videos or resources or groups of people. But it was through the course of reading, right? I was reading and I happened to read Kiyosaki's books actually just after they came out. I mean, this was like 99. And so, we're looking at single family rentals. We're living in Denver at the time. I mean, I can literally remember to this day, bribing the kids, 4 kids in the back of a car with lollipops while we're trying to go investigate properties, right? And then at nighttime try to do, run the numbers and pencil something, but I could not make that work. So it was a process of, really networking, meeting other people, continuing to learn on that process. And I think, the Purple Pill, Kiyosaki's books, right, were really a massive paradigm shift for a lot of people. But it was very conceptual, right? And it was like, okay, this is a great idea that you can get into some of these alternatives, but what do I do, right? How do I create a business? What kind of business should I be in? What about taxes, right? How do I get access to these different investment properties? But eventually, I ended up through networking, meeting a private equity guy who is actually in the Texas region. And, that was my first real foray into private. So I started working with him and then continually, building out my network from there.
I love what you said there about Robert Kiyosaki's book, because I picked that book up back in 2009, so many years after you, but conceptually it's great, right? And it's such it invokes so much thought to go out and challenge the traditional norms of how we go out and make money. But to your point, doesn't really give you the sort of the blueprint, right? Taxes, the how-to, which I found it myself was kind of challenging. It was sort of teasing you a little bit to say, yeah, well, this is what you can do. But well, go on, tell us, what do we do next? And then that's the business of writing books and getting him into the coaching of what Robert Kiyosaki does. But I had the same experience where it's like, okay, there's this great idea about the cash flow quadrant, moving into the investor status through business owner or self-employed or employee, and understanding the different relationships between how that all affects you and your income and the way you earn your income. But going out and doing it, it takes 10,000 hours, right, in whatever direction you choose. So it's interesting to hear 20 years later, after you've gone down this path, how much diversification you've come across. My question to you is, have you had more clarity in that around being diversified and being like a surfer and pivoting and not just like sticking with one asset class? Has that been good for you, or has that been? I assume it has been, but in the beginning, I know a lot of people start out and say, I'm just going to do real estate. I'm just going to do X, Y, Z. And you seem to be able to have, navigated a wide range of different alternative asset classes. How has that gone down in the evolution or the decision-making process around that over the last 20 years?
Yeah, good question, Reed. So I really consider myself a wealth strategist and a professional investor before I am, just a real estate investor. Right. And it's really interesting because, if you think through the psychology of money and what money really means, once you get past money, right, we're accessing money to be able to, I think, achieve 4 different freedoms. One being freedom of time, right, to have the time that you want to have in life. You want to have freedom of purpose, to wake up every day and be fascinated and motivated about what it is that you're actually doing. You want to have freedom of relationship, to choose the people that you want to work with, right? And of course, you want to have freedom of money to create experiences and impact in your life and do all those things that you really want to do. Right. So when you really kind of understand that, right, at a deeper level of what you're trying to achieve, then you can start to build a strategy about how to achieve that, right? Why I like, real estate, and why, this is a huge asset class. If you actually look at the ultra high net worth, you look at Tiger 21, their portfolio allocations, right? It's real estate and private, alternatives are over 50% of their portfolios. And the reason is because of three things. I call it the trifecta of investing. They've got tax efficiency, they've got consistent passive income, and they've also got forced appreciation where you can drive value into an asset. Right. So we're all familiar with that on the, real estate side and value add and how that works. But there's some other asset classes out there that are really quite compelling that can do the same thing. And also around, I also look at investments from basically the macroeconomic standpoint. So for instance, we have an oil and gas fund we were talking about earlier. And, if you think back to Maslow's hierarchy of needs, right, at the base level, you've got food, shelter, energy, water, right? We need energy for everything in this world, whether you're in Australia, you're in New Zealand, or wherever you live, or whatever industry you're in, right? The demand for that is just only growing, right? So we like to invest in assets where there's a growing demand, right? And the fundamentals, really make sense. And then from an investor, again, looking at different things, such as in that case, 100% of your investment is actually tax deductible against active income, right? So that's huge. I mean, we've got a lot of high income earners in our investment group. So being able to provide a solution for them is really huge.
Let's go down the path of oil and gas. I've actually never had anyone on the show talking about it. So I'm very interested to draw the parallels between those three pillars you sort of talk about: tax efficiency, consistent cash flow, and forced appreciation. Because we obviously talk about real estate here. We talk a lot about real estate, a lot about forced appreciation and the reason you get involved in hard assets. But let's just from the high level start with maybe some of the similarities, and then we can get into maybe some of the perceived risks of oil and gas, given the boom. And you always hear about the boom and bust, and I don't want to get into the negative just yet, but let's go on the positive. So do you want to just walk us through what are the similarities between real estate and then some of those tax efficiencies you just mentioned?
Yeah, well, it's a very interesting asset class. So one thing is, Reed, that we've aligned with an operator partner that has a very similar approach to multifamily value add. That's kind of their unique differentiator in the marketplace, because the CEO, he's a fourth generation oil guy, and one of his good friends was a multifamily guy. Right. So 7 years ago, he kept talking to him about all the benefits of multifamily. And then he said, his light bulb moment was, hey, I'm going to create that in the oil and gas industry. So typically in oil and gas, there's different levels that you can play. At the front end of it is much more speculative, where, there might be wildcatting or a lot of, just kind of drilling, right, on that front end, which is more of like a, R&D kind of, perspective, right? And that's higher risk, but higher return as well. In this case, what we're doing is we go after what's called PDP, which is proven production, right? Proven developed production. So we actually know through 3D seismology that there is oil underground in a particular area. It's just a matter of, okay, how can we extract it and then optimize it, right? Because once you get to, peak flow, right, that's when, this thing starts really cash flowing super well. One thing that's also, unique about this asset class is it is a depleting asset, right? So as you're pulling oil out of the ground, right, your reserves are actually, getting lower and lower. So that's kind of the business model in this case, is that, we're drilling for oil, and we actually have a split between 50-50 gas and oil, which provides a nice natural hedge there because the two prices aren't always necessarily correlated. And then from there, the idea, typically in oil and gas, like pension funds are usually going after these because it's steady income, right? They're just driving the income play from it. They're getting the tax deduction from it. But then eventually, the wells kind of dry out. In our case, what we're doing is proving up these wells, just really optimizing the assets. And then we can sell that to buyers, either an upstream buyer, like a larger production player like ConocoPhillips or something, or one of these pension funds who's more of an income type buyer. And there's transactions that are happening, there's probably 20, 30 of them every day or every month, sorry, across the industry. So it's, that's kind of the process of really, what's happening. But again, it's a unique model in this case with the operator we work with.
And you mentioned risk earlier. It seems like it's towards the more exploratory risk. You've got a scale of 1 to 10, 10 being a stabilized, sellable asset to a pension fund. Where would you fit? Say a four to 6 on that range, because you're coming in are you drilling and then getting to that peak flow that you sort of said, and then sort of stabilizing it and then selling? Is that where you sort of fit in?
I think it's much more around the 7 in terms of, better on risk, because like I said, we're going after this PDP. So we know there's oil underground. It's not just wildcatting, right? Which is much more exploratory in nature. We know that there's oil underground, so we're trying to, go after that. And like I said, the technology has come along so far these days. I mean, there's 3D seismology reports, and we've seen, lots of production reports where, things are there, and you just have to, you have to be able to access it. And the other thing I find really unique as well, Reed, so similar to, multifamily property, right, where you'll have a third party appraiser come and value the asset, right? Well, we do the same thing in oil and gas, where there's a third party appraiser that based upon that PDP value. And then there's also something called PUD, which is proven undeveloped production. So that land actually has value on its own too, because, it's the potential to be able to access oil under there. So the PDP and PUD values are actually valued by a third party appraiser, and really substantiate, the asset of what we're going after and the overall potential value. And even banks, like in Texas and everything, banks actually lend based upon that value. And you can't get more conservative than a bank, right? Well, I guess that's
it depends on what bank you're banking with. But
yeah, I was going to say.
With SVB going under. So coincidentally, my background's in civil engineering, and I spent a few years working for a mining company, similar sort of stuff. We call them rock doctors, geologists up in the plane, flying over vast land, barren land that you wouldn't even consider usable, but it's great for mining. And they do these very, very complex modeling to determine what is beneath the earth, from a geological point of view, everything from oil and gas all the way through to minerals and hard assets. And typically, just for the listeners out there, oil and gas come together because oil puts off a gas, and you can use both. If you find copper, typically you find gold. So as you mine for certain minerals, you find other minerals, deposits alongside of it. Just to give a little bit of background, bit of context, I spent a lot of time in the jungles in Fiji and in Thailand with you're trying to find and taking core samples for different mining companies. It's a completely different business. But with that being said, are you doing that? Is the company that you're partnering up, are they going out and doing the exploration, or are they already knowing it's identified oil field? We're just going to come in and buy a right to mine on, or
it's the latter.
Yep,
it's the latter. So we're leasing the land, and part of it is a real estate play, right? Because you've got to go after the land that you think has the potential, and that's typically done through land leases through the owners.
Gotcha.
The property owners. Yeah.
Yep. So now let's talk about the benefits and the similarity between the value add there, right? So you go find this lease, you go find this land, you're then coming and putting the wells on it. Is that correct? And then refining it and then selling it off. Okay. So you're doing a soup to nuts, everything from putting a drill in the ground, getting it out, refining it, putting it on a truck, selling it to a human distributor who gets it into the pump down the street from where we live. Correct?
Yes.
Yeah, great. Awesome. That's interesting.
That's exactly it. But again, from like the investment standpoint, I mean, a lot of people just don't realize, because especially if you're a real estate investor, we're all understand bonus depreciation, how that works against our passive income. But look, I mean, since the Reagan era, there's been really strong energy incentives as well, tax incentives, right? So 100% of this investment is actually tax deductible, which is really huge against, W-2 active income. So, for a lot of high paid professionals, it's a really good, alternative.
Yep. And just so for those listeners out there, depreciation is shown up on a K1 or a loss, and we just issued K1s. And sometimes investors can't access some of the depreciation because they're not full-time real estate investors or certain categorized by the IRS. And again, I'm not a CPA, but I'm a little bit dangerous when it comes to understanding a K1. But Dave, are you saying that even if you do have an active income, you can still get all the losses from that just based on what the IRS has written in the code?
Yeah, correct. And the way we do that, the way it's structured is actually when you get your K1, you actually sign subscription documents as a GP, right? Because you have a working interest in the well. So you are actually a GP. So you share in, the active income as well as the active losses that go against that, and then once the fund, all the capital is deployed in the fund, then you get converted to an LP position.
Gotcha.
Later on.
Gotcha. Because that would be my next guess. Like everyone's got then a voting right to decide what to do with the investment, which could be a can of worms opening that thing up if you had 100 investors all wanting an opinion on what to do with a certain oil rig or not.
Yeah.
In terms of, let's get on to the sort of the ebbs and flows of the energy industry, right? We saw a cost of barrel plummet. I can't remember. It was just at the beginning of the pandemic. There was ships out in the sea that they couldn't even give away the oil at that stage. How much volatility is in around that to protecting someone's investment, and what are you doing when you're actively looking to buy into certain times of the market when oil is valued and gas is valued at certain different prices?
Yeah, great question, Reed. Really that's the biggest risk is we can't control what the prices are, and they move around all the time. The pandemic prices obviously cratered like you talked about, but it's come back really strong. But the really interesting thing is that, since the pandemic and even before that, this industry has not had much investment at all because there's been such a push towards all these green initiatives. Right. So that's where the money is going. That's where, politically, people are trying to drive capital to these ESG initiatives. And the industry just has not had much investment. Right. And then you add on top of that geopolitical events like, the war in Ukraine. Right. I mean, natural gas right now in Europe, in Germany, completely short. Right. In terms of that. So, we think that the timing just couldn't be better in terms of demand, because of some of those reasons. Another reason is, look at China, right? They've had one of the most stringent lockdowns that's been almost for a year. And so once they kind of come back online, we're expecting prices to really start to increase. So I think there's a lot of, geopolitical, economic factors going into, demand for the oil. And then when you just kind of think about the fundamentals of it, again, it's just petroleum-based products. The green initiatives have barely made a dent, like 1% to 2% with the trillions that have been put into it over the past decade, in our demand. And it's used, petroleum-based products are used in everything from the microphone you're using, the headphones you're using, the computer, your wife's makeup products, right? It's literally in everything. And again, no matter where you live in the world, or what industry you're in or what you're doing, right? I think there's just very strong demand. Mm-hmm. So I'd like to be positioned there. And the other point that I'll make, Reed, which is really fascinating, now it's really coming to light in the marketplace, right? The current devaluation of the dollar, right? That's been happening really, for quite some time. So the question is really, how do you hedge against that? And we've talked about hedging in commercial real estate, right? Because, it can be good in an inflationary environment, but, one way to think about it is if you're positioning your capital in assets that have inherent value, right? So there has been a push towards commodities right now because, they have more, they hold more value. And something, again, like oil and gas is definitely, whether we go to war, whatever happens in the economy, there's some strong value there.
It's a physical asset that you can, it's not paper, which is what you're trying to allude to. Back to your point on the investment into alternative energies. I know there's been a huge push for that, and you mentioned earlier in the show that it's a depleting asset. So, casting forward 100 years, 200 years, no one has a crystal ball, but do you see it changing and with the depletion and of a commodity that people still need and want?
I think so, right?
Yeah.
I think it's going to be much more gradual than people think. I mean, I know, some states and car manufacturers, they're talking about, all green by 2030. I mean, there's just no way. I mean, there is no way. And look, I'm all for the planet as well, but you've got to have some reality into here, right? And I mean, think about the other thing is like natural gas, for instance. I mean, Europe actually declared it as a renewable energy source, right? So there are some ways to use the energy, I would say, more effectively. Right. For the environment.
And I have seen carbon capture from oil fields start to be, like layering on top of green initiatives in the way in which you're extracting or catching. And I'm not an expert in this, but just there are ways to sort of tick the two boxes, if that makes sense. You can you be more effective in the way you're capturing it and then repurposing it. And then putting, you sort of nearly double prong in terms of producing energy because you produce it from the physical oil or gas, and then through not necessarily the manufacturing, but the refining of it, you can then create another source of energy, which is obviously renewable at that stage. So it's a very, very interesting space, and I'd love to know more about it. We only have limited time with you today, but I will encourage people at the end of the show to reach out to you. So with that being said, what's the plan for 2023 and beyond? Recession-wise, are you thinking that there's a recession coming? How does that affect your oil and gas or any of your commercial real estate or alternative asset investing perspective between now and the end of the year?
Yeah, great question, Reed. And again, this kind of goes back to our overall holistic wealth strategy, right? Because I think the majority of people don't actually have a wealth strategy in place. But when you have a strategy in place, you can manage the peaks, you can manage the valleys, based on, geopolitical events, economics, things that are happening. So for instance, one thing we do, I know your listeners are probably familiar with, is the infinite banking, policy. So we help our clients with that, right? And that takes a lot of, uncertainty and creates some certainty in your operating capital. Right, you're able to create this baseline of capital reserves. Plus, it's a great place to have your dry powder. Your money's growing, compounding tax free, and there's a multiplier of benefits right on top of that. So that's one way that you can just remove some of that uncertainty, right? And then obviously investing in some of these asset classes that are non-correlated to the markets. And then, like I said, have, at the base layer of Maslow's hierarchy, where you have strong fundamentals that support them, you're in a better position for things to be recession resistant. And also, as you look to allocate capital across your portfolio, we're always thinking about it. It's almost like solving problems for investors, Reed, right? And when you really think about, what are investors trying to do? I mean, forget about the asset class for a second. People are typically looking to, offset their taxes. They're looking to create income streams, right? That are predictable. They're looking to have growth opportunities, right? Where you can grow your capital. So there's different things that are people, are really trying to do. So then trying to, fit some of these asset classes that can support that need. We actually have a merchant cash advance fund that's just rolling out that some, top hedge funds are on and everything right now. And we're bringing this to our clients. It's got very compelling double-digit cash flow returns, and we've structured it in a way that helps, both short-term investors looking for income, as well as, growth investors looking for that, income and growth. And there's just some amazing velocity to that fund. So.
Interesting. I'm sure we could talk for a whole episode about that exact investment strategy, because it's something that I haven't heard a lot about, but clearly it's out there and clearly people need it. So with that being said, at the end of every show, we love to dive into the top 5 investing tips. You ready to get into it?
Sure.
Mate, question number 1 is, what's the daily habit you practice to keep on track towards your goals?
Meditation.
Yep. Every day?
Every day.
Yep, I know. With the baby, it's been hard for me to get it back into every day, but it's something that I find if I don't do it in a day, my day's slightly off. It's not having that quiet time in the morning. I don't know when you do yours, but I do mine in the morning to center myself before diving into the chaos of running a business. So,
100%.
Question number 2 is, who's been the most influential person in your career to date?
I think that would be Dan Sullivan. So he's the leader of the top entrepreneurial coaching company called Strategic Coach. So I'm a member of their 10X group and been involved in that for 6 years. Phenomenal insights. If you're an entrepreneur, I highly recommend checking out.
Awesome. Question number 3 is, what is the most influential tool in your business? And when I say tool, it could be a physical tool like a journal or a phone, or it could be a piece of software that you just can't run the business without. What is it?
Wow, that's such a good question. So as part of my strategy around this holistic wealth strategy, right, I've essentially been trying to build a system out of building wealth, like we've talked about. So as part of our mastermind and virtual family office, I have my CFO who's taken a couple software companies public before, a very experienced guy. We've been working on a Skunk Works project around actually creating an entire software-based tool that can manage all of your alternative investments, whether you have businesses, you're running oil and gas, you've got commercial real estate, you've got ATM syndication, all these different syndications. It's like, okay, how do I manage, the, pro forma versus, what was come in? How am I managing my tax rates? Right? Do I have a strategy to reduce my taxes? And where is a dashboard to do that with KPIs that aligns to my goals and values? So that's our tool that we're creating.
When's it launching?
Actually next month.
Okay.
But it's only exclusive access for our mastermind and VFO clients. So
Okay. We'll get that contact at the end of the show. Question number 4 is, in one sentence, what has been the biggest failure in your career? What did you learn from that failure?
The biggest failure was in my tech consulting company. We had 6 years of massive growth, triple digit growth. We had literally won the Inc. 5000 award for fastest growing company by like year 5. And, it was just all up. And we had a bunch of government clients, and there was something happen called government sequestration, where they basically put a freeze on spending. So, and this was a consulting business. So we have, 6-figure consultants, right, on payroll. And we went from being completely at the top of our game to being underwater, like in a process of like 90 days. It was just, it was crazy, something we couldn't predict. So my biggest lesson learned there was really, not having all of your eggs in one basket. And again, this is why, I really like having a strategy, right, that also mitigates your downside, and you're using things like infinite banking. So you've got capital reserves to be able to manage through things that, are unpredictable.
I love it. Yeah. It's so poignant looking back on where pinpointing that time where you changed and pivoted to not having all your eggs in one basket. So I think that's been definitely the underlying theme of today's episode. Mate, last question is, where can people reach you to continue the conversation? They want to be in your sphere. They want to find out what you do, want to be part of your coaching calls, all that sort of stuff. Where do they go?
Yeah, absolutely. So, just go to our website if you want to learn more about the book. You can go to pantheoninvest.com/wealth hyphen strategy. And we have a book landing page there. The book is actually trending #1 on Amazon for financial engineering in small business taxes right now. So you can pick up a copy of the book. And we've also got some bonus materials in there that are really cool. We have a 401k exit calculator. So if you exit your 401k and actually pay the penalty, which is really taboo, and you invest it in one of Reed's deals and keep doing that for the next 20 years, you can kind of see where you would, compound that growth to versus keeping it in the 401k. So we got some kind of fun assets in there you can check out as well.
Awesome stuff, mate. Well, look, I want to thank you so much for jumping on the show today. Really appreciate your time. I just want to reflect some of the things that I took away from today's show. I think, your purpose in and around identifying the freedom of time, the freedom of purpose, the freedom of decision making and the relationships you have, and the freedom of money help building what you've built today, and just the myriad of different experiences by the sounds you've had over the years, through starting a tech company, through investing in oil and gas, all the way through to investing in commercial real estate, to really make you that holistic investor per your book. And I definitely encourage everyone getting their hands on a copy of that book today. But I also want to thank you again for sharing some insights in and around the oil and gas industry, because it's something very, very interesting to me. I see a lot more people investing in it, and I encourage people who are interested maybe in oil and gas, maybe reach out to Dave and his company to see what they can do, because I know you're a part of a board that helps people invest in oil and gas. So did I leave anything out here, mate, in that little summary?
No, that's awesome. Just really grateful for the opportunity, Reed. It's always a pleasure to connect. We've known each other for many years, and really appreciate it. Appreciate you, and thanks for the time.
Mate, my pleasure. Look, I want to thank everyone for taking some time out of your day to tune in to continue to grow your financial IQ, because that's what we're all about here on this show, investing in the US. If you do like this show, the easiest way to give back is to give it a 5-star review on iTunes. And remember, please hit up Dave at Pantheon Investing. You can Google his name or the book, Holistic Investor, and make sure you reach out and just get involved with what he's doing, because he's got some incredible stuff happening over on his platform. Again, we're going to do this all again next week. So remember, be bold, be brave, and go give life a crack.